Welcome, everyone. So nice to see everybody online today. I'm very, very excited about tonight's webinar, Women and Investing. This is part of my Building Foundations for Financial Wealth series. So for those of you new to me, I am Kelly Slott. I am the owner of California Wealth Advisors, and I'm excited about talking about this. I think this is going to be so important to so many of you. And husbands and wives, partners, I think this is important for everyone to listen to. So let's get into it. Before I get into it, we will have questions at the end, so I'll save the questions. Those of you that have questions, you can write them in the chat, and I will try and get to those at the end. If I don't get to your question, it's not because I didn't want to. Maybe I thought I answered it already during the webinar, or I need to take it offline and answer perhaps later. So anyway, just if you have questions, by all means, put them in the chat, and I'll try and get to them at the end. Okay, so Building Foundations for Financial Wealth is my series I run all year long I talk about different topics. If you are interested in other topics, by all means, go to my website, californiawealthadvisors.com, and look up my educational resources, all my TV interviews, my radio shows, everything is on there to educate yourself. I am all about education. I really am. That's why I do these. So tonight with Women in Investing, so important for so many of us. So let's jump right in. I am a radio show host, as many of you know. KNX 1070 AM is my radio station. It plays on Saturday mornings. All of my radio shows, I have almost 4 years now of radio shows on my website. So you can go listen to any of those previous radio shows too. And each radio show we do has different topics to it. So by all means, go there for a little bit more education if you're looking for that. And I did write a book, The Great Retirement Mystery, How to Avoid the 6 Biggest Blunders. This is appropriate for anyone, and especially for anyone out there that's listening tonight that is not so familiar with investing. I think this is a great precursor to really learn how investments work, my strategy that I use, some of the pitfalls that you can look out for out there. I have on my title there, the 6 biggest blunders. Those are huge, I think, to avoid for anyone. If you're 20 years old or 80 years old, it really doesn't matter. Retirement is in the title of my book, but really it's appropriate for anyone. It's not a big book. It's easy to read. You can go to Amazon and get that. Barnes & Noble also has it. So by all means, get my book if you're looking for a little bit more education on strategies. So part of what we do here is certainly manage money. And what I've come up with over the last few years is my private client process, because so many people come to me and they want something more than just their investment planning, their investment dollars being invested for them. So I came up with a private client process. So I'm going to stop share of my screen because I'm going to write here. So the private client process, again, is to help everyone understand your entire financial house, not just your investment dollars. So what I do is I put myself in the middle here as your financial director. So I'm like the quarterback, if you will, of your entire financial house, not just your investment dollars, which is here. So these are your investment dollars up there. And that's, of course, very, very important. But there's so much more to your financial house than just your investment dollars. So what am I talking about here? Well, here's your investment house. Over here is risk. What kind of risk do you have in your entire financial house? And what are we talking about here? Well, taxes. Are you paying too much in taxes? I think that's a huge risk that I see with a lot of people. When you're paying out taxes, you don't get a return, do you? So when we're paying out so much, that's a risk to me. That's dollars going out of your pocket you're never going to see again. So how can we stop that? How can we mitigate some of that? Certainly we all need to pay taxes, but let's not pay more than we really need to. So I have tax write-off types of programs, tax-free income types of programs that are great for a lot of folks. So taxes, I'm also looking at life insurance. I'm looking at long-term care. I'm looking at property and casualty. I'm looking at Social Security. All these things have risk to them. So do you have the correct property and casualty insurance? Do you have a lot of rental properties, for instance? And are they titled correctly? Your titling is important here. That's a huge risk that I see. If you don't have enough insurance on your properties and they're not titled correctly, You can be sued for things, and that's not good. That's a risk I see in your overall financial house. So we're going to look at these different kinds of things for you. I talked about life insurance and long-term care. That's really important. We're all living longer. All of us are living longer. Have you looked at long-term care? Have you looked at how you're going to pay for any long-term care situations? And any of you out there that have loved ones that are in a long-term care situation, it's very expensive. So let's do something ahead of time to take care of that. So there's a lot more risks here, but just to give you kind of an idea there, that's the risk I talk about. I want to talk here too about estate planning. Again, do you have trust documents? A lot of clients, high net worth clients, come to me and they don't have a trust at all. So that means all their assets would go through probate should they pass. Let's avoid that. We don't want your heirs fighting over assets. We don't want the courts deciding where your assets go. And having a will, while it is great, is not going to stop probate. Also, I talked about titling up here. If your rental properties are not titled correctly, and that's usually in an LLC that we need to set up for you, you can be sued if somebody hurts themselves on that property. So if somebody hurts themselves on one of your rental properties and it's not titled correctly, they can go after not only the value of that property, but all of your assets here. So again, I talk about titling and setting up LLCs and having the estate planning documents for you. And the estate planning documents also include medical powers of attorney, medical directives. Those are all really, really important in your estate planning documents. And if you have not had your estate planning documents updated in the last couple of years, I would suggest call us and I'll give you the estate planning attorney that we use. I am not an estate planning attorney, but I work with a lot of CPAs and estate planning attorneys to make sure documents are correct for our clients. And then I go over here to the vault. So the vault is where we put all of these important documents. So you have access to the vault, but your passport, for instance, your driver's license, your estate planning documents, your insurances all go in here. Obviously, your investment dollar accounts and statements go here as well. So the vault is a wonderful place to have all of your documents in one place. It brings peace of mind and comfort to many of our clients because they tell their children, if something should happen to me and I'm in the hospital, I'm not going to die, but I'm in the hospital for 6 months. You go to California Wealth Advisors, they have my medical directive. They have the power of attorney, so you can pay my bills while I'm at the hospital. And then when I get out of the hospital, we're back to normal, which is great. But let's make sure someone, your heirs, know where to come if something should happen to you. So this is just absolutely terrific. I have a number of clients, unfortunately, over the years are mentally deteriorating, unfortunately, and they have the vault. They have all of this ready to go to for their heirs so they can be taken care of nicely, which is a huge source of comfort for many of our clients. Then we're going to talk about investment dollars, and that's what we're going to talk about the rest of the webinar here tonight. So I don't care if you have $1 million or $100 million. If you're not taking care of all of these things, you're at risk. Your entire financial house is at risk. I don't want that to happen. I want this to be taken care of for you. So let's make sure your investment dollars are taken care of. Let's make sure your risk is taken care of. Your estate planning documents are looked at, as well as we've combined everything into the vault for you. So this is different than just investment dollars. This is really what makes us very different than other financial firms, because most financial firms are only going to deal up here with your investment dollars, and usually they're going to put you in portfolio A, B, or C. Portfolio A, B, or C. I don't do that. I tailor make portfolios, and I'm going to jump into that here next. But I wanted to go over the private client process for you. I did record a webinar on this on my website, californiawealthadvisors.com. That I go into this in more detail. So by all means, go there and look at that if that's of interest to you. A lot of my clients like that peace of mind that that can bring. Okay, let's go back to my slides. Okay, let me go here. Okay, perfect. All right, let's talk about women in investing. We want to have financial independence, and I don't mean that you're away from your partner. I want you to understand that you know what you have, how it's doing, who to talk to if you have questions, how it can better serve you, perhaps. So women have unfortunately been systemically excluded from the financial world for much of history, really. And it wasn't even until 1974 that women gained the right to open their own bank account, believe it or not, or hold credit cards in their name either. And it wasn't until 1988 that a woman could independently take out a loan to start a business. So it's not been that long, actually, and I'm so glad it's different now because, I mean, look at me. I'm a business owner, own my own business, started my own business as well. So that's why I think it's really important for women to understand investing. It's incredibly it's incredibly important for them to achieve the security that they're looking for. Women tend to be more conservative in what they do. They tend to not like to take a lot of risk. So I want to make sure you're empowered tonight. And this webinar tonight, by the way, is for men and women, because the men that might be listening, this could be great for your wife, your spouse, your partner. It could be great for your sister, a friend, your mother. This is really great information, I think, for anyone to be listening to and hopefully enjoying what I'm recommending and talking about here tonight. And, you know, really, I would say California Wealth Advisors, we are very dedicated to empowering women to take control of their finances and their financial future, and making sure they understand what's going on with their financial life and make their financial journey successful and wonderful for them, really. So what I find is many women today find themselves in, unfortunately, a historic financial dependency situation. It's the same as their grandmothers faced, relying on a spouse to manage the financial decisions that are going on in the household, because the women are caretakers usually. And that can work for a number of couples, and that's wonderful. But there's a lot of vulnerabilities there that can create for women. So what are those? Well, women are more likely to outlive their husbands. There's going to be a huge transfer of wealth between husbands and wives because the husband will die sooner. So it's an intergenerational, if you will, transfer of wealth. Women, unfortunately, they're very affected by divorce because if they haven't been looking at the finances, they don't know what to do once they get a divorce, or even if the spouse passes away. So that's why I'm doing this webinar, and why I've done many webinars to help women and men understand the challenges that we're seeing, and really to understand investments in general and how they can really work for you. So let's make sure that you're covered by all of these things. And of course, we can see spousal abuse by not telling the woman of the family the dynamics of investing. They don't want to explain it to them, for instance. So let's make sure we don't have any of that. So some things that you need to consider, I believe. 75% of women are the caregivers. That means they're not working. They're paid 41% less due to reduced work hours because of that caregiving. And these, unfortunately, are just facts, but we have solutions, so stay tuned. On average, women save a little bit less than men. And why is that? Well, they're not making as much, so they're going to save less. And I would say 80% of women over age 65 will probably be more impoverished than men. And these are unfortunate statistics we're finding. More than 20% of women provide financial assistance to their elderly parents. So again, women are saving less because they're spending it to take care of elderly parents. And, you know, that we just want to make sure that you're saving more, that you're doing more, being proactive in your financial life. And interestingly enough, 90% of women will have sole responsibility of their financial decisions. Well, why is that? Well, women are living longer. There's going to be that lateral movement of wealth from husbands to wives once the husband passes away. Well, 90%, that's a lot of percentage of women that will have sole responsibility of their financial decisions. I want you to be prepared for that. I want you to understand investing and how your portfolio is working for you. Now, thankfully, we've progressed, and that's wonderful. Women account for 70 million participants, workers in the U.S. workforce. That's fabulous. Nearly 10 million businesses with a revenue of 1 trillion or more are owned by women. That's fabulous. Women control 22 trillion of personal wealth assets. That's amazing. And they account for nearly 50% of U.S. workers. So that means women are working more. They're making more dollars. All of these statistics will improve over the coming years, I have no doubt, and that's a good thing. Okay. Okay, women have overcome barriers. They've overcome earnings barriers, income barriers, and they do have more access to financial institutions. But they still struggle to maintain or obtain, I should say, the financial acumen of men. And that's okay. That's why I'm doing these webinars, right? So you get more knowledge. Only 40% of women understand stock market basics. Okay, I am going to do a webinar soon that goes over stock markets specifically and markets in general. I'm going to do that. So stay tuned for more webinars on that. 40% of women invest less than men. And why is that? Well, they're making less, so they're going to invest less. So that makes sense. 15% of women are more risk averse than men. And I would actually say, in my personal experience, I would say more women than men, much more than 15% are risk averse. A lot of times I have a couple and the husband loves to take risk and the wife doesn't want to take any risk at all. So, you know, it's important to pay attention to all these different things. 55% of women believe that risk is a key factor in building wealth. So you've got to have some risk to build wealth. That's just part of the structure there. So as far as men go, 62% of men understand the stock market basics. Okay, that's a big difference between 40% of women. 50% men save more. Well, they're making more, so they're saving more. So that makes sense. Men test 14% higher on financial literacy. Okay, so again, men understand finances more. And I don't know that that's necessarily true. I think women certainly can understand financial literacy. They just haven't been educated on it. So men might know more, but only because they've been educated slightly more. And 65% of men believe that risk is a key factor in building wealth. And again, men tend to be more risk oriented than the women do. So, you know, interesting statistics there. I want to really highlight the importance of taking control of your financial future. It really is important to do that. And all that means is listening to some webinars, educating yourself. Go to my radio show, listen to a number of those. Go to my previous webinars, educate yourself. That's the only difference between you and anyone else that might understand something a little bit more than you do. So let's talk about investment tips here. So these are some of the things I want you to keep in mind when you're creating your financial plan. Longevity. Women live longer than men. I want you to plan for that. And I do that when I sit down with you and I come up with an investment strategy for you. Let's make sure that we have long-term in mind here. Healthcare costs. Healthcare costs are getting higher for all of us, not just women, men as well. But again, women live longer than men. So they've got to have these healthcare costs taken care of. I talked about long-term care when I was writing on my whiteboard. Healthcare costs, long-term care, health insurance. These are all really important things to look at. Make sure that you've looked at that for yourself. You've had somebody knowledgeable look at that with you. Volatility. Diversify and balance your portfolio to help hedge against potential market declines. You've got to have diversification in your portfolio. I talk about this all the time. You've got to diversify your portfolio. You've got to have it balanced. You have to have an investment strategy that looks at different asset classes in your portfolio. And I will go over all this in a minute. So if I've lost you here, don't worry. I'll cover that in a minute. Inflation. We've got to have inflation hedges built into portfolios automatically, because inflation being 4, 5, 6%, has been higher than that recently. You're going backwards because $1 today does not equal $1 tomorrow when you throw inflation in there. So let's make sure we've covered inflation in your portfolio, and we make sure that if your investment dollars are not growing by 4, 5, 6%, what are we doing to mitigate that inflation? And do we have that built in? Legacy, what do you want to leave behind? Again, I talked about estate planning documents. Who do you want your assets to go to? Do you want some money to go to the Cancer Society or a charity of your choice? How do you want to be remembered? That's the estate planning documents I talked about. We got to cover that for you. And if you haven't, or if you haven't updated your estate planning documents, we need to do that. And again, I'm not an estate planning attorney, but I will recommend ones for you. Okay, what do we do when we're not sure about the investment strategy that you might need, that you might want, that you're looking for? Well, you came to the right place. That's what California Wealth Advisors do. We love to educate people. We love to make sure they understand what's going on in their portfolios. So what are the key components to investing? Well, first of all, you have to have a plan. Having investment dollars is not a plan. It's great. You might have inherited it. You might have gotten a divorce and now you have it, but that's not a plan. That's just dollars. That's not something that's working for you. That's not something that's designed specifically for you. So when you have an investment plan and it's designed specifically for you, that's what's going to bring you peace of mind. That's what's going to bring you comfort. I love that. The other thing is you've got to have diversification. You can't just have investment dollars and great, you've got stocks and bonds and whatever else is in your portfolio, but you've got to diversify amongst that portfolio as well. And I came up with years ago the mass proprietary process. M is the market, A is alternatives, and S is safe money. So when you have all three of these, that's the investment strategy I'm talking about. That's the specific plan designed for you. And yes, I'm going to jump into that here right now. So what do I mean by the mass proprietary process? And this is investment basics here, it really is. This is what makes us very different than other financial firms. So M is the market. Those are stocks, those are bonds, those are mutual funds. Those are what I see typically in 401k accounts, in IRAs, even in pensions. That's all they do, stocks, bonds, and mutual funds. Nothing wrong with stocks, bonds, and mutual funds. But as you can see on my chart here, that is red for a reason. It's going to be volatile. It's going to go up and down. Markets go up and down. Just look at history. Markets go up and down. And a lot of times people come to me and they don't want to have that much risk. They don't want to be 100% in the market. And they might have $1 million 401k or a $5 million trust account that they either inherited or they got when they got divorced. And it's all in the market. Well, it's all volatile. And while that might be great, and I do like that for the growth that it can provide, I talked about inflation. That's a great place to get growth. It can be great for creating income. That's great. I go there a lot of times for income as well. And liquidity of it. Yes, it's liquid. Stocks, bonds, and mutual funds are liquid any day of the week. So if we ever have a tragedy and we need large dollars, that's great. We can take it from there. So stocks, bonds, and mutual funds are wonderful for that. And I can go into more detail in stocks, bonds, and mutual funds in a later webinar, but I want to give you an overview here today. This is, again, how I diversify portfolios. Excuse me. So when I look at the mass proprietary process, A being alternatives, okay, what are those? Well, that's real estate. Those are oil and gas write-off programs. Those are tax-free income programs. Private placements are in that area as well. Why do I like alternatives? Well, it's different than the stock market. It's not going to go up and down like the stock market every day. When you own real estate, and we do many real estate programs, they have 4, 5, 6% in income. They have growth attached to them as well as the real estate goes up, hopefully in value over time. And it's professionally managed for you, so you don't have to worry about that. I do a lot of 1031 exchanges too for people that have rental properties. You do have to become a client of ours to work with those and an accredited investor. Same with the tax write-off programs. Those are in the alternative space as well. When you don't want to pay so much in taxes, we go to the alternative space. We go to the tax write-off programs that are there. So if that's you, call us and we can go over that with you. A lot of times people sell businesses. They get a divorce, they sell a business. Someone passes away, they inherit a business that they want to sell. They have publicly traded stock that they've made a bunch of money on. They want to sell it, but there's a huge gain there. or they have a primary place of residence that they've sold and it's gone up quite a lot in value. And so they'd have to pay huge taxes. Well, we do have programs that will help with all of those things. So again, if you've sold a business or you're thinking about selling a business, if you have a highly appreciated asset in any way, we can save you a lot of taxes in those areas. Again, I don't want to go over that today, but we can help you with that. That's in the alternative space. And then we look at the safe space. And I will say a lot of my women clients love the safe space. So those are insured products backed by insurance companies, backed by the insurances at a bank. For instance, if you have a CD or a treasury bill or something like that, a savings account, those accounts are insured. And those are wonderful because most of the women I talk to like less risk. They don't like to be too much in the red part here in my mass proprietary process, the markets. They don't like too much there. Men tend to like more there, but the women tend to like more in the safe section. Okay, so markets, let's talk more about that. Markets go up and down. It's red for a reason. The M part goes up and down. Long term, it can be great. People can make lots of money in the stock market, and they have historically, and that's great and wonderful. And I do a lot of management in the stock market as well. But again, I like the diversification. Again, I mentioned it can be liquid. Great. If you need money tomorrow, I can liquidate something and send it to you. But it can be volatile. It absolutely can be volatile. Just think of 2008. The markets were down hugely. Even 2022, the markets were down a lot that year. So anything in the M part can be very volatile. All right, let's talk about the alternative investments again here. Real estate, private placements, precious metal, anything that does not trade with the stock market. It does not go up and down with the stock market. So a lot of my clients absolutely love that. We often create income and growth out of this section as well. It's not traded, so it's illiquid, which is good. Now that can be a bad thing too. But again, when we do an overall financial plan for you, we are going to put some money in the market for the liquidity of it. But the non-traded part, the alternative part, is not liquid. It's illiquid, which is actually good because then you're not seeing that volatility in the market that you're seeing in anything that you have in the stock, bond, and mutual fund section. Generally, the real estate, the private placements, the oil and gas programs, they're somewhere between 5 and 7 years in length. And again, they're professionally managed for you. So you're not managing it. You're having somebody do it for you, which is great. Okay, let's talk about the safe section because many of my women clients absolutely love the safe section. So what am I talking about here? Well, these are products issued by insuring companies, backed by insurance companies. The principal is guaranteed on a fixed annuity or a fixed indexed annuity. I'm not talking about a variable annuity. That would be in the red part. But the principal, again, is guaranteed backed by insurance companies. It can create growth and it can create income for life. And many of my women clients love that. They want to have income generated, guaranteed for the rest of their life. And again, we're all living longer. So it's sure nice to have income that's going to be guaranteed for the rest of your life, which is fantastic. Now, for annuities, you can withdraw 10% for free, no cost. So if you put in 100,000, for instance, you can take out $10,000 a year. You have to wait a year and a day, but you can take out $10,000 a year and there's no fee for that. Now, usually they have declining surrender fees to them. So if you take out more than 10%, depending on how long you've held it, you might have some kind of fee there. But again, I'm going to look at that with you before we take any money out. It's a great legacy passing tool as well. So again, you put in $100,000 in an annuity and you died tomorrow, let's take it in that scenario, then 100,000 would pass to your heirs tax free. Now, if you put in 100,000 and it grows to 200,000, then the first 100,000 would go to your heirs tax free, and then the other 100,000 would be taxed at that point. So it's a great legacy passing tool as well. All right, this is how annuities work. There's fixed index, and there's variable. So the variable is in red. Again, that's in the market. They're going to buy mutual funds. So that's the M part of my master proprietary process. You can see how that goes up and down a lot. That's a variable annuity. But if you take it from the first point to the final point there, on the red, it goes up over time, but you've got to weather the downturns, right? So what I prefer to do is either a fixed or a fixed index, which is the fixed is the blue line. You're going to put money in. It's like a CD or a bond. You're going to put $100,000 in. You're going to get 5% rate of return. Your money's going to mature in 10 years. You get your 100,000 back. You've earned 5% the whole way along. That's a fixed annuity. What I like to do more is the fixed index. That's the green line there. So yes, it goes up over time, you can see, but you can also see it never goes down. So you have those downward protections to yourself. So you're not going to see the volatility of the stock market. You're only going to appreciate what happens in the stock market. So I love the fixed indexed annuities. And yes, these can generate income for life as well. So if this is you and this is of interest to you, then let's sit down and we can talk about it. So the average returns on the fixed index annuity can be 0% 1 year, because again, if the market goes down, you're not going to lose any money. You're not going to make any money, but you're not going to lose any. A lot of my women clients specifically love that. And I would say on average, 7, 8, 9% is what I see generally in those accounts. You can definitely create income streams that'll be guaranteed for your life. And we can do life insurance programs too. I do have annuities that have long-term care attached to them these days. I didn't even have that, I think, a year ago. But I like those products for folks as well. So again, yeah, the long-term care, death benefits certainly for your heirs, and it can create tax-free income. That's the life insurance side as well. All right, what are the benefits of the fixed indexed annuities? Well, it's an insurance product backed by an insurance company. You can take savings account and turn it into income by putting it into an annuity. You can get the growth out of that as well. I showed you my chart there a minute ago. The protection of principal, again, you have that downside protection with those fixed indexed annuity. You can have income guaranteed for your life, 100%. And if you don't need anything out of these annuities, and it can grow for you tax deferred, excuse me. Because if you have an annuity and it's growing for you by, let's say, 6 or 8% a year, and you're not taking anything out, you're not paying any taxes on any of that. So that's tax deferred growth for you. So it's kind of like a bond replacement. I like that. And there's a lot more options to them as well, like long-term care, for instance. And I would say predictable income does make retirees happier, that's for sure. Okay, so to sit down with us and to go over what we do is the first part is to establish a relationship. That's to sit down with us, go over what you have. We'll ask you a lot of questions. We're going to be gathering that information together. We're going to analyze it and evaluate it for you. Then we're going to develop that and come up with recommendations specific to you based on what you tell me your time frame is, your income needs, your risk tolerance, all of that. And then we'll implement the plan for you. And then, of course, we will monitor it regularly. I have so many radio show listeners that meet with me and they say, my advisor never talks to me. They never tell me what's going on, or they tell me very little. We don't do that. We are very detailed in what we do, and we do meet with you regularly. That's very important to us. So figure out where you are. So if you have a portfolio right now, are you all in the stock market, stocks, bonds, and mutual funds, or are you all in cash? That's not good either. I talk about that on the radio show all the time too. When you have too much in cash, you're not keeping up with inflation. So you've got to have a mix of all of these things. In my view, you want to make sure your principal is protected in some of your assets. You want to make sure you've got growth and inflation hedges in your portfolio, and you want to make sure you're diversified. So let's make sure you're in the proper place of where you need to be. So I have different things on my website that I think will be very helpful to you. The budget sheet, know what your budget is. If you're asking me to create income for you, I need to know what you spend each month. I need to know what your budget is. So the budget sheet is on my website. I highly recommend you go there and fill that out for yourself. Bring that in when we meet. The asset sheet is great, and this is for anyone whose spouse has passed away, or maybe they've gotten a divorce. Know where your assets are. So the asset sheets are on my website as well. Let's find out where all your assets are and list them here. So we've got everything covered for you. And then a bucket list. I created this because a lot of times people retire and they've been working for many years and they just don't know what they're going to do when they retire. They come to me 6 months later and they say, I'm bored. So before you retire, if you're in that situation and you're going to retire soon, I want you to think about what you want to do in retirement. And I've got a few suggestions here, but I want you to come up with your own as well. So what do you want to do? What makes you happy? And some of these things on the bucket list might cost some money, like going on a safari. That's not a cheap endeavor. Well, we need to put that in the budget sheet, that first sheet there. We need to put that in there and plan for that. So I usually tell people, have a budget sheet for when you're working, and then have a budget sheet for what you think you will spend in retirement. And let's compare the two and make sure that you're covered with that. Again, this goes to the planning part of your entire financial house. So who do we work with? Well, 401k, certainly in-service transfers if you are still working, but you can take money out of those accounts and have it professionally managed for you. I can do that for you. Rollovers certainly are when you retire. You don't want to leave your money at the 401k, and why don't you want to leave it there? And even the in-service transfers as well. Why don't you want to leave the money with the 401ks? Because generally 401ks only give you 10 or 15 different choices of mutual funds. There's 8,000 mutual funds out there. Those are likely not the best ones. Plus, they will only put you in the M part of my master proprietary process. They will not do alternatives for you or even save money for you. So again, that's why people do in-service transfers with 401ks as well as rollovers with me. If you can't do an in-service transfer or a rollover, sometimes we can open a brokerage window, which allows me as a professional to come in to the 401k and manage that for you. And that's part of my private client process that I offer as well. So a lot of times people don't know what to do with those 401k dollars, how to invest in which 10 or 15 different mutual funds to choose. And a lot of times they need that professional wealth management for them. Trust accounts. Well, of course, we do individual accounts. We do joint trust accounts. We do, help you set up the powers of attorney and all of that. Update your trust accounts. I think that's important too. Again, I am not a estate planning attorney, but we need to have those to protect your assets. Annuities. Again, there's a variable annuities that can be great, fixed or fixed indexed annuities, and 1035 exchanges too. If you have an old annuity that's not performing very well, or it doesn't look like it's performed very well, I can look at those statements, come up with recommendations for you if I can improve that. That's called a 1035 exchange. That's taking it from an old annuity and putting it into a better annuity for you. And I won't know that unless I actually look at the statements. So I would say bring us some statements if you have those. Same thing with old life insurance policies. The old life insurance policies typically do not have long-term care attached to them. If you have an old life insurance policy, I likely can do a new life insurance policy for you and add long-term care. I talked about long-term care earlier. Women are living longer than men. Let's make sure this is taken care of for you. A lot of times we can improve death benefits as well. So let's make sure that that's taken care of for you. And usually the women are more concerned about taking care of their heirs than the men are in a lot of situations. So let's make sure that's looked at. And then Social Security, what's the right time for you to take that? If you're married, maybe the higher earner takes it first. Maybe he waits till later or she waits till later because that's a higher dollar amount. You get about 8% more every year you wait on taking Social Security. So again, what is right for you? Oops, I want to go back to that other slide. So again, having tax strategies, having cash flow management, having protection of your assets, the investment management, and making sure your philanthropic interests are taken care of too. These are all really important things to look at. We are A+ rated with the Better Business Bureau. We're very proud of that. And we do have a complimentary services, of course, portfolio reviews. We do Roth conversions. Many clients are coming to me lately for that. Debt management. We can look at cash flow projections, very important, especially when you get closer to retirement. Emergency fund management, we want to look at that. Certainly retirement planning. That is why I wrote my book and came up with that. And then, of course, we're going to provide any tax documents that you need from any of the accounts that we have here for you. And required minimum distributions as well. I have many clients that have required minimum distributions every year that they need to take out. And looking at your budget and planning for that, making sure the dollars that you require, that you want to live a happy life with, is being generated for you some way. Is it your investment portfolio, Social Security, pensions, however we're going to create that for you. And of course, I do seminars and client education events like the one here tonight. Constantly. I'm constantly trying to educate people out there. So whether you're a man or a woman, the seminars and client education events that I have in person and webinars like this one are oh so important, I think, for you to be updated on what's happening out there and how we can best serve you. Because it's all about you, it's not about us. So again, we have events all the time. Go up and sign up on my website or call into the office to get any kind of events that might be happening. I do have some questions actually. So again, I'll go over this in a minute here, but I like the first meetings to be in person, that we meet with you. That's my preference. I want to get to know you. I want you to get to know me. So I think that's important to do. So call the number here, 805-941-0444 is our direct office line, or you can send me an email at kelly@californiawealthadvisors.com. Okay, I do have some questions here. So let me go, I'll stop share here. Okay, how do I get more involved with my spouse and our investments? Oh, okay, that's great. Okay, sounds like your spouse has probably been doing a lot of the investments up to now. Okay, so just, I would say to them, hey, I would like to learn more about our investments. I would like to know more about where our money is. And again, looking at the different webinars I offer will help you with a lot of that, understanding where or how investments work, where investment dollars can go. And then I would say, you know, bring your spouse as well, and let's go over that and educate everybody about where investments are. Okay, here's another question. I'm concerned about estate planning. How would I make sure this is taken care of? Okay, estate planning documents are very, very important. Everyone, I feel, needs to have trust documents. So that's making sure your assets are titled in the name of your trust. Now, if you have retirement accounts, 401ks, IRAs, 457, 403bs, any of those kinds of accounts, those are trusts in and of themselves. If you died tomorrow, those assets would go to your named beneficiary. Same thing with life insurance policies. You have a named beneficiary. Whenever you have a named beneficiary, it does not go through probate. So you don't need to have that in your trust. However, any assets outside of a trust, if you have money in a bank account or a financial firm, it should be titled in the name of the trust, in my view, because that will protect your assets, that will protect your heirs from going through probate and paying a lot of money and having the state decide where your assets go. Because having a will is wonderful, but that does not stop probate. So I do have estate planning attorneys I work with. If that's of interest to you, I would say give us a call and we'll go over that with you. All right, last question here. I want to create more income. How would I do that off of our investments? Okay. Again, this goes through me tailor making a portfolio for you. So if you have a portfolio and it's not creating a lot of income, I likely can move things around a bit and create more income for you. And usually I will say women tend to like to see more income coming on off of their accounts than the men do. The men like to take a little bit more risk, and nothing wrong with any of that. But let's make sure that both sides are taken care of. It's a husband-wife or a partner situation. Let's make sure you're both aware of where the money is, first of all, how it's managed, the diversification that's appropriate for you, your time frame, your risk tolerance, all of those things are taken into account. So I know I have more questions, and I know Dana and David, I'm sorry I didn't get to your question, but I want to, in the interest of time, I want to say thank you very much for joining us today. I really appreciate it. I hope it was helpful for you. This webinar will go up on my website shortly. And by all means, go to my website and look at all of our other webinars as well. And check the events tab on our website for upcoming webinars that we're going to have. I know we're going to have an estate planning attorney and a CPA and me, do a roundtable. That will be coming up soon too. So anyway, it was a pleasure to see all of you. Again, thank you, Nancy. Thank you, Sue. I appreciate you being on the call today. Great to see all of you. But any other questions, by all means, just call us directly. Okay, great. Have a good evening.